Thanks again, everyone, for joining us. My name is Jordan Thorson. I'm a communications specialist with UFHR Communications and Work Life. Today, I'm joined by Halie Corbitt. Halie is a family consumer sciences agent with UF IFAS Extension and is the VITA state lead. So she's going to help kind of talk through some tax filing basics and go over some tools and resources for you to use when you're filing your taxes this year. Before we get started, just some quick housekeeping. So this webinar is being recorded. It will be made available later, both on the UF at Work YouTube channel as well as the Work Life at UF website. That being said, you're welcome to turn off your cameras in case you don't want to be involved in the recording. We also ask that you remain muted throughout the presentation just to avoid any accidental interruptions. We're very grateful for that. For questions, we ask that you hold your questions till the end, and Halie will get to those. We'll leave a good section of time for Q&A, so don't worry, you'll get your questions answered. And if you do put questions in the chat, just make sure you're not including any personal information before we get to that point. Other than that, I think we're good to go. So Halie, I'll pass it off to you.
All right. Good morning, everyone. I'm glad that you could join us today. And I know that taxes are a hot topic right now. It's that season. As Jordan said, I am part of UF IFAS Extension. In case you haven't heard what we are part of the university that takes all the research that is done from the university and provides it to the community in a way that they can use it in their everyday life. So I specialize in family and consumer sciences, which is the word consume. So I teach and work with people after they've grown something or produced something or have something and are consuming it, hence taxes, right? We have money, we consume it, but we still have to pay the taxes on it. I'm also an accredited financial counselor, and so I help with basic counseling information with budgeting and all those kind of things for clients as well. So I have a wide range of background. I came from, I was a UF grad, and then I got a master's at UWF, and I have a master's in public health, but I teach mostly finance and nutrition and health and wellness. And then I'm also an accredited financial counselor, as I said, and I've been doing the VITA system, which stands for Volunteer Income Tax Assistance, for 7 years now. So I will not say that I am the tax expert and everything, but I have learned a lot through the time. But I will also tell you that with every year, taxes change just a little. And so don't be surprised if you see something change from one year to the next. And we'll talk a little bit about why in just a few minutes. So if you don't know about extension, there's so much more out there to offer than just my family and consumer sciences. There's ag agents, if you've ever heard of 4-H, that's a pretty common one. But we also have horticulture, so help with gardening. Master gardeners are a part of us. We're a big organization, and there is an extension office in all 67 counties. So we're always happy to share the information and also appreciate what UF provides to us to be able to share. So let's get into taxes. So your taxes. This is where I always like to start because I like everybody to understand that everyone's taxes look a little different. You're probably thinking, no, mine's basic, it's whatever. Oh no, there is no such thing as one tax return that is the same as the next. It doesn't happen. Nobody's W-2s match, nobody's 1099s match, nobody's are an exact same. They don't even match for you personally from year to year. It changes every year because your income changes or we have, that whole cost of living, influx, all of those kind of things. So there's constantly things that are changing. So no one looks the same, and I want to be sure about that. So I go over, instead of trying to tell you this exactly how you do a return, because your return may not look anything like somebody else's, I go over the basics of what a return is, and then the resources that you can use to effectively complete your return. And then, of course, I'm here to help answer questions, those kind of things. If you have a question that's burning as we go through, you can type it in the chat. However, my disclaimer related to questions is if it starts with my situation or my tax return or my whatever, then you probably should email me, not put it in a chat or ask it over the interweb. Okay. And the reason why for that is this is your money, your finances, those kind of things. And that is a personal thing. So we want to be sure that everybody doesn't know. If it's a general question, I'm happy to answer. And my email will be at the end. So you don't have to worry about how you're going to get a hold of me. All right. Oh, I'm not sure how we went backwards, but we're going to go back forward. Sorry about that. All right. So, my first question I always like to ask is, have you completed your taxes yet? Because some people are like go-getters and they have to do it. So, if you have, will you drop it in the chat? I just like to get an idea of whether people have or haven't. I have a few that are Johnny on the spot every year, and I have some that are procrastinators and wait till the end. I'll be honest, personally, I'm an in-betweener. I get them done somewhere in there, but I'm not rushed because I want to make sure I don't forget anything. Those kind of pieces. So, it's always interesting to see. And I see some of y'all say yes, but not yet submitted. So I like that one too. So you worked on it, you kind of have an idea of where you are, but yet you haven't hit that button just in case you get something else. It's a pretty smart way to do it too. So there's a couple different things to do it. And you still have plenty of time. So somebody said running late. Nope, you're not running late. You have until April 15th to file. We're not even at the end of February yet. So technically, I would still call this the early time. Okay. So no running late yet. I'm just always interested to know because even in my office, I do volunteer income tax assistance, and I get some that call and they want the very first appointments, and I get some that call the day that I open appointments and they schedule for like the end of March because they want to wait. So it's always interesting to see how it plays for us. But remember, no matter what, whether you have everything or not yet, you do have to file by April 15th. And if you do not file by April 15th, you will be penalized. But in the sense of that, if you can't file by April 15th, you need to file for an extension. Okay. So there is ways around it to give you that extension, but make sure you can't just say, oh, it'll be fine. No, the IRS likes penalties and fees, and they love to charge you interest. So just know you want to make sure that you're always ahead of them. Okay. All right. So taxes in Florida, and let's talk about this specifically, okay? Because taxes in Florida are different than other states. So there are many states that charge state taxes, and there are quite a few now that do not charge state taxes. We are in the category that there are no state taxes. However, we still have to pay the federal government, which is how every other state is. So you're probably thinking, how does that work? Well, I was telling you earlier that it'll never look the same, yours nor anybody else's, or year for year. So Congress determines all of our tax laws. Okay. We don't, I mean, we vote on them and those kind of things, but we don't actually, get to say, yes, I want to apply this to my tax return, or no, I don't want to apply that to my tax return. You can decide on some of your things, but you don't get to decide which income gets put on the return. The income just has to go. Okay. Also, adjustments are made annually for inflation. They do consider that when they do standard deductions, when they do credits, all of those kind of things. Inflation is a factor that goes into that. So that's also why from year to year, your tax return won't look the same either, because even those credits slash deductions, your income, all those things are going to adjust based on inflation. And so your, or cost of living, whichever term you want to, go with on those, and it's going to change. Now, federal taxes are a pay-as-you-go system. So you're probably thinking, what the heck does that mean? Well, you reconcile is essentially when you file your taxes, you're actually reconciling your income for the year. Okay. Everybody thinks of it as we're paying our taxes now, but really it's a pay as you go. So you should have paid your taxes throughout the year so that at the end of the year, you're just reconciling and balancing back out whatever it was that they paid. If you owe more than 1,000, you're typically going to be penalized for that. And if you, and they'll charge interest. If you get back more than 1,000, they don't pay you interest, and there's no extra things that you get for it. So there's always a sweet spot with your taxes, and everybody's individual, but you'll want to figure out where the best place is for you. Tax returns, you're required yearly. So every single year you have to pay. There is not an age limit. That's my favorite question that I get every single year. There's not an age at which you hit that you no longer have to file taxes. It has everything to do with income. So if your income is over that standard deduction for the year, you're required to file taxes. So that's a good basis for that. Okay. I mean, there's other factors that go in there, and we can talk individually when you get to those points, but there's not an age limit. It always is there. Also, remember, taxes can be deducted automatically, especially W-2s, and a lot of retirements do, but not all of them do. For Social Security, most people have to elect. If you get paid through a 1099, you have to elect for those federal taxes to be withheld. So you want to make sure that you know where you're withholding taxes and where you're not. And then also remember, sometimes the basics, and we're going to talk about this, are not enough to pay on that pay-as-you-go system. So you may have to make some changes in your own withholdings in order to do that. I have no clue what is going on with my mouse. I do apologize. Maybe I'll try the keyboard. Sorry. It is touchy today. All right. So tax basics. So when you go to your tax preparer, you're gonna talk about, all your income and those kind of things. But I like to start with your deductions so most people understand what you're actually going for. So a minute ago, I said that you have a required to file as long as you make more than a standard deduction. Well, you're probably like, well, what is the standard deduction? Well, these are the standard deductions for this year on your screen. However, they do change again with every year based on that inflation or adjustments that are made. So it's not going to be exactly the same next year. And yes, guess what? Last year it was not exactly the same either. So those are kind of those adjustments that get made. There are two different things. There's deductions and credits. Okay, so a deduction is actually bringing down the amount of taxes that you owe by bringing down your income. Okay, and a credit is where they give you money towards it, and some of them are refundable and some of them are not. Okay, so the whole goal, of course, is to bring down how much taxes you have owed, and so that you don't have to pay in or pay back. But there's always that limit of or that play area where you want to figure out what is best for you. And again, that's why I say all taxes are individual. Okay, so always keep that in mind because my favorite thing when people come in, especially like this year, there's the new senior deduction. Okay. And I know it may apply to y'all, it may not if you have to be 65 plus. But it's an extra $6,000 that adds under the line of the standard deduction and goes to it. But it's a deduction, so it's not refundable. So a lot of people are like, oh, I thought I'd get that money back. No, it simply just brings down your income. Those credits are the things that you get back. But again, even all of those are not completely refundable. The child tax credit's one of those, so it can go back. Dependent care credit, we could keep going. The three this year that are kind of cool, and I want to make sure that y'all know about, well, there's, sorry, two extra deductions, and then we'll talk about the two other pieces that go, is the senior one that I already mentioned that came through the big, beautiful bill. And then also is the car interest loan deduction. So that one's kind of cool. So this year, if you bought, or not this year, if you bought a vehicle in 2025 that was new, not new to you, it had to be actually new, and you got a loan for it, you can deduct that interest on your tax return this year. Okay, again, it's a deduction, not a credit, so it just takes down your liability of income. And there are limits. So there is areas where if you make more than this or below this, or it's called it's your AGI, but it's also other factors are put into it, and it's called phasing out. So you may phase out based on the amount of income, and there's levels for single and for married filing jointly. So just remember that you could qualify, but you may see it count as less if you make more, and it may count as more if you make less. Those are the pieces, and that's where, like I tell you, everyone's is different because everybody's level is different. But always make sure that you look at the credits that are out there because it's always worth at least perusing every year. This second thing is just from the IRS. And it lists all the credits for the years and and the deductions, and you can it gives you a quick synopsis of what they are and see if you qualify or not. It's always kind of cool to see ones that you can or can't qualify for. Some are self-explanatory. If you don't have children, you're probably not going to qualify for the child tax credit, but you might qualify for the dependent credit if you're taking care of a family member. So those are all things to look at. You also have all the energy ones, and with the energy, you have to go read it because only certain things qualify for the energy credit. So you want to make sure that you actually know what you're bringing to the table, and make sure you don't forget to bring something when you're doing your taxes. Okay, you want those receipts to know how much it cost you. All right, so this is a tax return. This is your 1040. This is just the first page. Okay, so most of the time they're at least 2 to 3 pages, depending on how many go with it, and then you'll have forms and things that go after it. I didn't include all those here, but you'll have there's the Social Security benefits worksheet. There could be the earned income tax credit worksheet. There's a worksheet for the child care credit. There's a worksheet for dependent care credit. There's all these different worksheets that may be behind it. But when somebody generally asks you for your tax return, this is what they're asking for. They're asking you for your 1040. And everything, or not everything, it's a good snapshot of your financial history for, of course, the year that you're filing. Okay. It'll have all of your income. It'll list if you have different types of income, where it's coming from, what taxes you withheld. It tells if you get child tax credit, so it gives information about whether you have children, and your dependents are typically listed here, your filing status, all of this. So it's a really good snapshot of you. And this is typically if you go to apply for a loan or anything and they want to look, this is what they want to look at, your actual 1040. But I want you to know we call this the tax return, but the whole thing is what makes up the tax return. And your documents that go into this are just as important as the tax return itself. Because if you ever need to amend or you need to explain something, those support documents need to be there too so that you can make sure that you have that information. So don't think this is the only thing you need to keep. You need to keep all of it, okay? And not just this beautiful form. All right, so most of us that are probably on this call fall in this category. We get W-2s. Don't panic if you don't get a W-2. I'm going to talk about the next ones on the next slide, okay? So W-2s are kind of the most common. So with these, you'll have your wages and income for the year, the federal income tax withheld. So I wanted to point out when you look at this one, you can check it throughout the year. Well, you can't check your W-2. You can check your pay stub throughout the year, excuse me, and you will see how much income you're receiving, that gross pay, and how much federal income taxes they're holding. By the way, let me make sure I do say that. This one right here is going to be your gross pay, not your net pay. So not that money that you see in your bank account every 2 weeks or once a week, however often you get paid. It's going to be that gross pay. So before you had your retirement taken out, your healthcare taken out, your FSA, HSA, I could keep going. Any deductions, okay? That's what you're going to see on here. And then you're going to have your federal income tax withheld. So on your W-2 or on your pay stubs, you're actually going to want to make sure that you're kind of following along and they're actually withholding what needs to be held. Well, you're probably thinking, how do I determine that? We'll talk about that a little bit later on with your W-4, but you want to make sure that you are paying attention to these numbers, okay? They should pretty much add, if you have an average of what, or have an idea, you can look at last year's if you're at the same job, or you can multiply by the number of weeks or half the weeks if you get paid every 2 weeks to figure out what your annual income is. You want to figure out what tax bracket that falls in, and you want to make sure that you're pretty much withholding that percentage of that tax bracket. It's not an exact science, okay? Let me be clear. That's why I said pretty much, but that's pretty close to give you a bearing. We're also going to talk about a W-4 in a minute that'll also help you determine more, and an app that'll actually tell you exactly if you're married, filing jointly, how much you need to withhold and all those things. So it's a really cool thing. Can you please explain that point again? Okay, so for your number one, this is going to be your gross wages. So your gross wages are there, and you can multiply how often you get paid. If you get paid, every 2 weeks, it's going to be there's 52 weeks in a year. So if you get paid every 2 weeks, it's going to be that 26. If you get paid once a week, it's going to be 52. If you get paid once a month, it's only going to be by 12. Okay, so there's all those different things. That's your gross pay to get your annual income. Your annual income will then put you in a tax bracket. You want to you can look at the tax brackets and kind of see where it falls. It'll tell you the percentage of federal tax you'll owe. You'll want to make sure you're withholding at least that much. Now, that gets a little more complicated if you have more than one job or if you're married, because then you want to add both your incomes together because that's going to be a different tax bracket. Okay. But you want to make sure that you just have that's a good average, that's a good estimate of what you want to make sure you're withholding. And again, I highly recommend that you check your pay stubs at least every few months just to make sure they're actually withholding something. I have met a few people with horror stories where they didn't check their pay stubs throughout the year and they get to the end of the year and they made, I'll just give an example because I don't actually remember off the top of my head, they made $30,000 and the federal income taxes withheld for like 300. Well, that is not enough, especially they were married, filing jointly, and everything else was not enough to withhold. So they wound up having to pay in. And so those are things that you need you need to make sure you pay attention to. The other type of income forms that we see a lot are going to be 1099s. So there are I've listed 7 here, but I want to say there's even more. And I don't actually know the exact number of how many 1099s out there are, but there are a lot of different 1099s. So what a 1099 essentially is money that you get for work. It could be work, or this could be interest or dividends. It's money that's kind of working for you. You will also get it if you're self-contracted on something. You'll get a 1099. Typically, those are miscellaneous. Sometimes they can be NEC, non-employee compensation. Those go interchangeable. And that's going to be, you're considered self-employed. So now you're also going to want to do a Schedule C and keep track of some of the things that you can to help reduce. You're also going to want to make sure as you get those throughout the year that you're keeping track so you can keep track of how much money you're going to have to pay in the long run. You can make estimated payments if you want, if you know that's what you're doing, so that you don't have to make that big chunk at the end without the penalties and the fees. But that's always something that you'll have to think about. Now, your 1099Bs, your 1099Ss, your 1099 DIVs, your 1099 INTs. So DIV is dividend, INT is interest, B is bonds, S is stocks. So these are all things that are going to be different types of investments. You'll get a 1099 INT from your bank account. And you're probably thinking that's not really an investment. It is. Like, you put your money in there, you're hoping to earn some interest on it. So unfortunately, well, not unfortunately, it is what it is. Uncle Sam's going to get his money. You have to pay the taxes on that interest that you earn. So with the same forms, it's the same way. So those are a little bit harder to predict most of the time. Your interest, you typically can, but sometimes dividends do better. Sometimes they do worse. Stocks and bonds are always fun, depending on how the stock market does that year. So you want to make sure, and typically they don't withhold federal income taxes with those. So you want to make sure that you're also thinking about that in your budgeting or in your taxes when you're working through them. So this is what I was talking about this is where you want to pay attention for if you have a W-2. If you have a 1099, unfortunately, this is not a possibility. They don't typically do W-4s with 1099s because that would require them to withhold the federal income tax, and they don't. So when you do a W-2 and at UF, if you're employed here, we have W-4s, and it's actually available on myufl.edu, and you can go edit yours at any time. You want to make sure the old school system was that whole numbering 1, 2, 3, where you claim whatever. That is gone, is how I'm going to say it. Okay. And they now have a new system. And it's you basically fill out your information and they determine that number for you, which can be a blessing or it can be a curse. So you want to make sure that you know what you're doing when you're filling out your W-4, and you want to make sure that you fill it out accurately. I won't go through the whole form, but one of the biggest errors that I see when I talk to people with their W-4s is they'll go through and it says, like, you'll put in, what you're filing, which is fine. But then it'll ask down here about qualifying children. So one of the biggest errors I see is that both spouses, when they're married, filing jointly. How often does UF have us redo a W-4? I don't know that they ever have you redo it, but it is under your myufl.edu, so you can adjust it at any point. So just so you know. But anyways, so with married filing jointly, I see a lot where on this question, what happens is step 3, both parents claim the children because we both have children, right? Like, I'm married, I have 2 children. So when I fill out my W-4, I put that I'm married filing jointly and I list both my children. Well, guess what? When my husband fills out his W-4, he says he's married filing jointly and files for 2 children. So now the government assumes that we have 4 children, not 2. So they're taking less taxes out because they assume we're going to get child tax credit for 4 children, not 2. So the amount of taxes they're taking out are less because you're supposed to get more money in your pocket. You'll get that credit at the end of the year, so it should all balance out. So that's one of the biggest ones I've seen with this system, is that both individuals claim. That is not how you should do. Only one of you should claim the children. I would say if you're not with the significant other, because I won't necessarily say divorce, say you're just not together, you can't claim 0. You cannot claim 0. That's my point. You cannot claim 0. Or are you asking to claim 0 children? If you want the highest amount taken out, you can claim, like, not put children in this category. But I was gonna say, and that's what I would suggest if you married, file separately, or if you're single and you have a child and the child gets claimed here one year and gets claimed here the next year, or however that works, because everybody's situation is different again. But I would not claim them on your return, because on the years you don't claim the child, it is going to put you most likely not in a good place tax-wise. So you do want to make sure that you're careful about exactly what you put. Also, another thing that's on here that was on the other one, but most of us, because we would just claim zero, as somebody said, we didn't technically have to do it or didn't think about doing it, is you can do additional adjustments. So extra withholdings or deductions or other things. So extra withholdings may be something when you do your federal income withholdings that you may need to withhold more. So you get the first pay stub of the year and you see that you estimated you needed to withhold $100 a pay stub or a pay period, and you get on there and they only withheld 50. Okay. Well, you can go in and try to manipulate this form to make it pull out the extra 50, or you can simply just go down here to extra withholdings. Oh, see, it is so touchy today. And you can add $50. So now it's going to withhold that 100 for every pay period that's there. Unfortunately, this I can help you some with this W-4 form if you need it, but I would also say HR can probably help you as well if you have a lot of questions. But it is different than the old form, so it's not as straightforward as it used to be. My favorite is for multiple jobs, and most people are like, well, I don't have multiple jobs. I have a job, my husband has a job. But if you read this one, it says if you have two jobs or are married filing jointly. So it considers even your significant other's job more than one job. So that's also something that you'll want to consider when you're marking boxes and those kind of things. So, again, this happened technically in 2020. It is being adapted by businesses across the country at their own rate. There's been no set thing. So some of them still use the old form with the 0, 1, 2, 3, 4, but most of them are transferring to this and just transferring the data you had previously onto it. UF is great. We can access ours on my UFL, so you can definitely check. And then, like I said, check your pay stub. Like your pay stub tells you a lot. You look at that gross pay and look at that federal withholding, see where you're kind of falling. Okay. Another tool that is great to use if you're terrible with math or really don't want to have to think about it, okay, is the W-4 estimator. And I would highly suggest this. I use this personally. I used it just last week to help somebody else. It's a wonderful thing that you can go in and use, and it tells you what to withhold on. It actually, when you get to the end, it shows you a W-4 and shows you what boxes to fill out. Okay, so it even gives you easy ways to put it into your W-4 if you need to, in the new form, not the old form. Okay, but you'll go through. What's cool about this is it does ask you about all your financial like numbers, and it's going to ask you if you have children. It's going to ask you their ages, but it's never going to ask you for your name, your social, anything like that. So it's not actually linking directly to you. It's just taking that financial information, putting it in, and estimating what your return is going to be for the next year. Again, I want to be key on that. The key there is estimate. And if you remember why, because every year Congress has the right to change tax laws. So this year, prime example, they made the big beautiful bill towards the end of 2025. All those tax laws are now applied to your 2025 return, but you didn't know that in January or February, or the W-4 calculator didn't know that in January or February. So with that, it's going to make it hard for them, or for you and for the W-4 estimator to estimate all those things. In this case, most of the things they changed were great for us, not in a, they didn't, they benefited us, didn't hurt us. But, these are still things that you want to think about. Wow. All right. So once you get your tax return done, you would like to end up with a refund, as most people do, but some people wind up with pay. And there's not really, nobody really wants to owe. If you owe more than 1,000, they typically do charge you penalties and interest. But I tell people if you're typically within like a $500 either way, you're doing pretty dang good because again, those tax law changes, those kind of things. But you want to make sure that with the rest, you're kind of staying below that 1,000. If you have to make estimated payments, especially if you have a 1099 type job, you're self-contracted, anything like that, those can help so you don't owe so much at the end of the year. They also help with those penalties and fees. If you get the refund, it should go directly into your bank account. I say that it depends on what service you use, but always be careful when you're using a service to make sure that the money is actually going to you and not to them. If you remember in 2020 when they did all the economic impact payments, which I know that's a blast from the past, but it's true. What they found out is that a lot of the refunds were going to a ghost account and they were fronting people the money for the things. So I always like to point this out because when we go to services and they instantly give you that money, the IRS doesn't instantly give money. So it's coming from somewhere and it's not from the IRS. So just know that. When we do VITA, I tell people it's anywhere between 14 to 21 days for your return to get your refund back. Okay. And that's because for me, I don't have any control over any of that. So it comes directly from the IRS into their bank accounts. Also, this year is a little different. They are very, very much so. It happened for years, but this year pushing it hard. Direct pay, where they directly deposit in, or direct debit, where they directly deposit it into your account, or you directly pay it from that account. They are trying very hard to get away from mail for many reasons. It's a lot slower, those kind of things. The option still does exist, but it's going to be really a long process either way for your taxes to be paid or for you to receive that refund if that is the way that you decide to go. My other favorite question after somebody does their taxes is, where's my refund? And I get it a lot because I told you I don't give money with the voluntary tax assistance up front. I don't give them anything when they leave here. I tell them how much they're going to get back, and it's going to go straight into their bank account. So they're always, or not always, most of them completely understand that. But I get the few that are like, well, I want to know where my refund is. Well, after I hit the submit button, I can't see anything anymore besides the fact that the return was accepted. Beyond that, I don't have a clue. So there's no follow up to tell me what's going on, where it's at in the process, or anything. So the best place, no matter who you file with, no matter how you file, is to go to where or to IRS refunds. It has a little thing where you can actually check your refund. It'll ask you certain questions about you and your specific return, and you'll put it in, and it'll give you that. It has like normally little dots and lines and tells you at what part of the process your return is in. Okay. And that's where it's going to tell you. Other than that, I will tell you, you can call the people as many times as you want. Most of the time, like me, they're not going to have a clue. They also added an app this year, because we're all about apps. So there's an app now, and that's what I put on the screen too, called IRS To Go. It's a legit IRS app, and you put in your information and you can see where your refund is, and it has some other little features and stuff you can play with too. You can make payments. There's all kinds of little things. So it's also another great resource if you're tech savvy. Okay. If you're not tech savvy, irs.gov/refunds. Okay. And it's an easy way for you to check it. So prep resources. We have lots of like infographics and those kind of things. When Jordan sends the follow-up email, I'll have her attach these to them. They are UF branding vetted. And so I'll have her attach these so that you can kind of view them. We have different ones based on just things that you need to make sure you're including your document checklist. If you have that self-employment, that 1099 for your Schedule C, these are all the things that you can list as expenses that could help offset some of those taxes that are owed. And then I'll include this one too. It's an older one, but it's still very relevant. You want to make sure that you know who is doing your tax return. There are a lot of, we call them ghost preparers. So they show up at tax season and then they disappear. So it's funny. I'm with Vita. So people are like, I only do it for an extension. So I only do it for a certain couple of months. And then I do other programming. So I don't stay with it. But through Vita, there's still access and all those kind of things. So I'm not considered a ghost preparer, even though I only show up for a few months. The ghost preparers were referring to the people that appear and then disappear, and then you can't get a hold of them and you're not really sure, but your friend Joe Bob told you about them, those kind of things. Just make sure who you're using is actually a reputable source. And the IRS has lots of different ways that you can check that. There's literally IRS tax preparers, and you can find free ones, you can find qualified ones, you can find all different kinds of things. So it's called a locator. So they have all different ways that you can look. So make sure that you're doing your due diligence when you file your taxes. So another cool feature that they have going, and they've had it for, I would probably say a year or so now. I'm never gung ho and jump right on the first year that they come out with something, because typically, as all things, it has a little bit of tweaks and things that need to be made in it. So this one though has been, and it's been awesome to use and to do. I will not tell you, it will not answer every question you have known to man, okay, but it will answer a lot of your questions related to your taxes, okay. So IRS Prep Help, it's literally an interactive tax assistant, and you can go in and type a question. Is this taxable? Is this not taxable? Do I include this? Can this be part of the Schedule C? Like, you can ask all kinds of different questions. Does my child qualify for the child tax credit? All kinds of different things, and it'll answer you. Now, again, this is a anonymous tool or a generic based thing, so it's not going to give you something completely. You can't put in, if I file this and then do this and then do that, it's not going to answer that kind of question, but it'll give you the basics of everything that you need. So I would highly suggest, if you're questioning something related, go and do this. If you have questions about the new car interest loan tax credit, I think it's on there. If it's not, you can also email me, or you can literally, IRS has been great about that one so far. You can Google IRS car loan tax credit, and it'll take you and tell you what qualifies, what doesn't, and it'll even give you a link to see if your car was manufactured or assembled. Make sure I get the right word, assembled in the US with your VIN. So it's really cool, different things that you can use. Another thing is tax preparation. So there are all different kinds of online options. So I am not telling you what you have to use or don't have to use. I'm more about those free options, okay? So that's what I'm going to talk about, okay? Now, you can go use all the systems that you are. I think I said H&R Block earlier. It could be Jackson Hewitt, it could be TurboTax, it could be any of them. I don't have a recommendation. I don't have anything against any of them. They're just different systems and you need to know that. Um, I'm going to talk about the free ones because to me, if you can, you should always try to get your taxes prepared for free. We pay enough typically in taxes. So there's a couple different places and sources that you can use. So the IRS locator is one of the great ones. So you can go to IRS, type in VITA locator, and it will find any VITA site near you. Now, VITA has rules from the IRS, or they call it scope. And so we have things that are in and out of scope. So there are certain things we just can't do, and there are things that we can do when we prepare returns. Also, each site is open to have their own level of things that they allow and don't allow, based on it could be the people that are, in that are their volunteers or those kind of things. So know that you may call one site, they may tell you they have an income limit. You may call the next, and they don't have an income limit. And that is completely acceptable. The only things we're not allowed to do is what the IRS literally says out of scope. Okay. And so, because I've done this for multiple years, when it says it's out of scope, it means I can't even access that form or the button that I need or whatever. So it's not just simply, I don't want to do it. I literally can't do anything with it. So it makes me feel bad, but again, those are things, I don't make those calls. The IRS does, and we have to follow. AARP is kind of a higher level. VITA is what I call them. So they have a much broader scope. They still have some things that they can't do, but they do have a much broader scope. So anybody that I typically have that I can't do, that's who I refer them to is AARP. And again, on the IRS, you can Google IRS AARP locator, and it'll tell you all the AARP sites near you. And each site will tell you whether you have to have an appointment or to walk in or how their system works. So don't be afraid to kind of look. TCE is it's just based on the elderly, but those are other sites that are out there too. Again, locators there. You also have the IRS Free File Online. So you can go and say IRS Free File Online, and it'll give you a bunch of different options that you can choose from. Now, the one thing I will tell you about this is actually read in the boxes because it'll sometimes say your income has to be between this and this. Your income can't be above this. You have to live in this state. I'm trying to think, there's all these different things that can be there, but there's a bunch of different options that you can use. So you want to make sure that you are looking into those different things and not just being like, oh yeah, I'll pay the preparer. If you have somebody you're comfortable with and been doing it for years, then use them if that's what you're comfortable with. But these are just different resources that you can use if you're interested. This mouse, dang, I'm so sorry, y'all. So, I actually wanted to tell y'all about one more. Sorry, let me go back and I'll put it in the chat. So I do VITA at my office where we actually do people come in and we'll do some virtual appointments. And there's a couple counties across Florida that we do it in. We also partner with the University of Georgia to provide the service too. One of my colleagues also provides a different type of VITA, but it's still VITA. It's through a TSA, so it's a system that you go in and you can do your taxes yourself. Now, it does have some income limits and some rules and those kind of things, but there's a survey that you can complete. Her name is Lisa Leslie, and she also will help if you have questions related to your return or anything like that. I'm reading her thing now. She's in partnership with United Way of Suncoast, which is down like in the Hillsborough, Tampa area. And their adjusted gross income cannot exceed 89,000. So I'll drop this link in the chat. If you think your adjusted gross income is below it, you can always answer the survey and you'll get a link to their system. If you're above that, there are other options that you can also use. That's why I give y'all more than just one. So make sure that you're looking into that. I also do VITA services at my office. This is my flyer that's on the screen with my telephone number. So we do offer it. You can see how the service works here. And we do have questions again because I have a scope. Her site is still a part of the VITA program, so it has a scope too. So sometimes that's also why it can't be done. All right. So the last thing is this is me. This is how you contact me. I do ask if y'all will take a few minutes to complete my survey. I'll try to put the link in the chat, or you can simply, type it in, scan the QR code. But I would really appreciate if you answer our survey for extension. That's how we get our funding to be able to provide these to give you the education and information, and also to be able to provide the VITA services that we do. So if you could just take a minute to do that, I would greatly appreciate it. I'll drop that link in the chat in just a second. And then disclaimer, I'm happy to answer questions, but if your question starts with something that is very particular to yourself, my email is right there. You can stop right now and send me an email with your particular question, and I won't guarantee I'll get to it today, but I'll get to it in the next few days, okay? So I'll be happy to help. I just don't want all your information out here for everybody. Uh-oh.
Right, and we do have some questions in the chat. You can just let me know when you're ready and I can read them out for you.
Okay, I'm gonna try my hyperlink one more time and see why I don't see a difference. But okay, you go ahead and shoot, Jordan, and I'm gonna
Sure.
also find the bit.ly link too, so in case they need it.
Sounds good. All right, so the first question is where can we learn more about the interest penalty on owing more than 1,000?
So the interest penalty varies every year. It's actually based on interest rate, the quarterly interest rates. And so every quarter, they assess, and then there's a new set interest rate. That's also how the way I use it that most people understand is like credit cards. If you have a variable rate, if you've ever heard that, and then it could fluctuate. So interest related to your taxes is at a variable rate. So it could be this rate, this quarter, this rate, this quarter, all of those kind of pieces. So you want to make sure well, that's the honest answer. You can go pull at variable rates, but that's going to be your answer for your interest that you pay. The penalty depends on how late you are, how much you owe, all of those kind of pieces. So as much as you can, you want to try to do it. The sooner you pay, typically the better off you are. And definitely before the April 15th. If you pay after April 15th, you're definitely going to start accruing that variable interest.
Great, thank you. And can you clarify what you mean by a credit not being refundable?
So there's so a refund. Okay, so a refund would mean you get it back in your pocket. A unrefundable credit means it's going to take your tax liability down, but once it takes your tax liability down based on the amount, even if it's more. So say your tax liability was still $100 and you were getting a non-refundable credit of $1,000. That $1,000 would wipe out that 100, but you would not get the 900 back in your pocket. It's not refundable. So it helps with that liability, but it's not actually going to come back to you. So it's a good thing, but everybody, thinks, oh, it's a credit, so I get it back. And not all credits are refundable. They don't give you that refund that we all get excited about.
Nice. The next question is, could you explain what it means by checking the boxes for your spouse? What boxes are you referring to? I think that was earlier in the
Yes,
presentation.
I do. So I think probably on the W-4, if I had to guess. And so on the I think that would be the only one. I'm gonna scroll back unless they want to say something different, but I have a feeling that's where it was because yeah, it had to be on the W-4 one. So you and your spouse will each have to, if you both have a job where you're uh somebody said if you'll copy and paste the survey link, it works. I'm not sure why it's not working as a clickable, but they said if you'll copy and paste it, it works. I apologize. I have no clue how to make it work as a clickable. I'm gonna assume it's a Zoom thing. But when it comes to your significant other and putting them on your form, So typically this is where you would mark the married filing jointly. And I was talking about like over here where it says multiple jobs. If you're married filing jointly and your spouse, that's considered two jobs. Even though we don't consider it us having two jobs, it's considered two jobs. So you want to make sure that you actually read through the form. myufl.edu, the whole form is not, I don't think the whole form's there. You might could click on boxes to see the whole pieces, but you can Google IRS W-4 and it'll come up and you can read the different pieces. But if you have a significant other, you do have to consider both of you. Like I said, you don't want to both claim the children. Like you want to consider both of you when you're filling out your W-4 because that does, when you file taxes together, both your incomes go. That makes it a higher tax bracket, which means you owe taxes. There's all those pieces. People are then like, well, it'd be better for me to marry filed separately. When you married filed separately, you lose out on a lot of the credits and some of the deductions that you get. You can, most of the time when I've done multiple clients, it is about an even break if you married filed separately or married filing jointly. Like I said, I would say probably less than $100 difference. So it's really not going to make a difference. And most of the time, the married filing separately is actually worse off because you lose those extra deductions.
Great. All right, and I'm going to skip a couple of more personal questions. As a reminder, feel free to email Halie, and she's happy to answer those questions for you and talk about your individual situations. But moving downward, let's see. Someone asked, are we able to schedule an appointment with you to help filing?
So like I said, you can call my office, and we have appointments, and that was my flyer that was up on that last screen. So it is a two appointment thing, but they'll have you some questions when you call to ask to make sure you're in scope, and then if you can, we do have slots available for people to come.
Great. And that kind of answers the next question too about recommended tax preparation services. Let's see. Someone asked, do these free tax help services also help with small business taxes?
That I think there are a few out there that do, and it also depends on your small business? Like, is it the lawn service on the side that you're just doing a Schedule C for? Because if so, then you probably could use some of those. If it's truly like a small business LLC, like you have a whole separate business account, like those kind of things, that's not really small business tax anymore. That's just business taxes. And that I don't know if there are any resources for. If you want to email me, I can look and see, but I'm not positive on that one.
Great. And someone else asked if the presentation will be recorded. Yes, this will be available within the next week or two on the Work Life at UF website, as well as the UF at Work YouTube channel. Um, Another question, again, any personal questions, please email directly to Halie. I don't know anything about taxes, so I cannot answer any direct messages that I receive on here. But other than that, I think that's all of our questions. If there's any additional questions, we have a few extra minutes. Feel free to unmute or send it in the chat. Otherwise, we'll probably wrap up in the next minute or two. All right. So, would green card holders have to report worldwide assets like bank accounts and others? Do you
So
know
I'm
anything
gonna
about
be
that?
honest with you. That one is out of my scope. We are not allowed to, or not allowed. It's not in scope. Sorry, I shouldn't say, which is essentially not allowed, but it is not in scope for us to do things related to that. So I would not want to give advice on that based on that limitation.
Sure. Yeah, totally fine. All right. Well, I think that is all the questions we have. So thank you again, Halie. Really appreciate you coming and presenting on tax services. This is always one of our most popular and requested webinars, so that's very helpful. Um, do you have a recommendation for those who have worldwide issues?
So I would say try using the tax assistance on the IRS page, like I showed the interactive tax assistant, because it does give you a lot of information, especially like those general questions. And then I do know that I'm not gonna try to tell you exactly, but I'm pretty sure there's somewhere on campus that helps with those kind of tax returns, but that is not me, so I'm not completely positive. There should be a tax clinic within I think, the the law, UF Law School. And so you may want to contact them and see if they may be of help to you.
Yes, I do believe that program is active currently, so there may be someone available. The International Center may also be a good resource for those kinds of issues. Yeah, of course, no
Thank,
problem.
thank you, Jordan. I appreciate it for
Yeah, of
assisting me on that
course.
one.
No worries. But yeah, I think we're going to be good to wrap up. So thank you again. I appreciate it, and I hope everyone has a great day. Thank you.
Thank y'all. Y'all have a great weekend.